You didn't build your business to hand a third of it to the government. And the truth is, you don't have to. So in the next 12 minutes, I'm going to show you exactly how the business owners who consistently pay less and keep more are thinking about taxes differently from everyone else, and what it actually takes to get the same result as them. My name's Adam Williams. I'm a licensed tax attorney, and we've helped over 1,000 small business owners save millions on their taxes. And here's the distinction I want you to walk away with today. There are 3 levels when it comes to taxes. Level 1 is tax preparation. That's your accountant taking last year's numbers and putting them in the right boxes on your tax return. That's it. That's tax preparation in a nutshell. It's documentation of history. Level 2 is tax planning. That's making estimates about what might happen and adjusting accordingly. It's better than preparation alone, but it's still mostly reactive. Level 3 is tax strategy. That's where everything changes. Strategy is proactively designing your business structure, how you pay yourself, how you time income and expenses, and where you invest and spend, so that the tax code works in your favor before the money is earned, spent, or allocated. Most business owners are stuck at level 1. They just don't know it. That's the problem. Here's the line I want you to remember. If your accountant only sees your numbers after the year is over, it's too late. They cannot help you change the outcome. They can only help you report what happened. And reporting always costs more than planning. Think about how most business owners actually operate. They make money, they spend money, they send everything to the accountant in February, and they wait for their number. And then they're frustrated by the bill. We call this April shock syndrome. That's not strategy, that's like damage control. And here's the thing, it's not your accountant's fault most of the time. They can only work with what you give them, and only when you give it to them. The real question is what changes when you show up to that conversation differently. So let's get into it. First shift is to stop asking the wrong question. Most business owners approach taxes by asking, can I write this off? And I understand why. That's like what TikTok trained you to ask. But it's the wrong frame entirely. A real tax strategist thinks in layers. What entity are you using? And is it still right for your income level? How are you paying yourself? How can income be shifted, deferred, reclassified? What legitimate business expenses are you actually missing? Where are you already spending money but not capturing all the tax benefits? What other benefits can the business provide? What investments create tax advantages? What timing decisions need to happen before December 31st? So here's the better question. What business result am I trying to accomplish, and how do I structure it so that the tax code works in my favor? The change to that one question is worth tens of thousands of dollars a year for most business owners, every single year. And before I keep going, there are a lot of strategies that can help you save money on your taxes, like thousands of them. So many, in fact, I obviously can't get through them all in this video. So I put together a list. These are strategies we're using every single day with real business owners to save real money. So if you want the list, click the link in the description below. The second shift is moving from looking backward to looking forward when it comes to your taxes. And this might be the most important thing I say in this entire video. Most accountants and most business owners are looking backward. Last year's income, last year's expenses, last year's documents, last year's problems. But real tax strategy is forward-looking. It's asking, what do we expect revenue to be this year? What's profit likely to be? Are we hiring, buying equipment, investing in real estate or any other assets? Are we going to change our retirement account? Are we changing our entity structure? Are we bringing our family into the business? Planning a sale? Here's how I think about it at Pennywise. We don't just want to document history. We want to help you accomplish your actual goals, and when the tax code allows it, have Uncle Sam help pay for them. That is what forward-looking strategy looks like. That's the whole game. And listen, I know what some of you are thinking. Adam, my accountant's a good person. I'm not trying to throw him under the bus. Good. Neither am I. Most accountants are technically competent people, but the issue isn't competence. The issue is timing and conversation and advocacy. If you only bring them in after the game is over, even the best player in the world couldn't change the score. That's not on them. That's on how the relationship is structured. Most accountants have you playing soccer or hockey without a goalie. Shift 3 is building a tax strategy calendar, because most business owners think tax planning happens in December, and December is already too late. January through March, you can clean up and set direction. You look at last year, what worked, what surprised you, where did the bill actually come from? Were the books accurate? Did you miss opportunities? April through June is where it starts to matter. You're projecting the year now. What's revenue likely to be? What's profit likely to be? Are you on pace for a much bigger year than you expected? Because if you are, there are moves available to you in June that are completely gone by December or November or October. And that's the window that most business owners don't even know exists. July through September, you're making decisions, equipment purchases, retirement contributions, accountable plan reimbursements, family payroll, real estate, timing of income and expenses, and you're adjusting your plan because of what happened in the first 2 quarters of the year. This is the strategy window, not December. October through December, the job is not to start thinking, the job is to execute. You've already decided. Now you confirm the numbers, make the final moves, document everything, and avoid surprises. Tax strategy is not a December panic session. And if you wait until October, you're gonna limit your options for this year. Some of them are gonna be gone entirely, but it can be a good time to start building momentum for next year. Shift number 4, know your numbers. And I know that sounds basic. It's not. You cannot have a real tax strategy conversation if your books are a mess. The tax return is only as smart as the numbers behind it. Business owners should know their revenue, their gross profit, their net profit, how they're paying themselves, what their cash position looks like, and what their projected taxable income is before year end. Now, you don't need to become a CPA, but if your P&L says you made $300,000 and you have no cash sitting in the bank, you need to understand why. Were you paying down debt, buying inventory, taking draws, buying equipment? Do you have receivables that haven't been collected yet? Because if you don't know, nobody's guessing harder than you are, and nobody should be guessing with your money. You don't need a master's in accounting. You're a smart business owner. Trust your gut. If something in your financials just doesn't make sense to you, something is probably off. Shift 5. Spending money is not the same as tax strategy. And because I see this every November, I want to be clear about it. Business owners who go out in Q4 and buy things because someone told them they should get more write-offs, here's the math. If you're in a 35% tax bracket and you spend 10 grand on something you didn't actually need, yes, you saved $3,500 in taxes, but you still spent $10,000. You're still out $6,500. A deduction is not free money. It's a discount, but don't let the tax tail wag the business dog. But here's what is worth pursuing. And most business owners never get to this conversation because they're still stuck asking the wrong questions. Shift 6 is learning to use the tax code as a roadmap. And this is where the mindset moves from defensive to strategic. The tax code rewards certain behaviors. It rewards owning a business, hiring people, buying equipment, investing in real estate, providing employee benefits, saving for retirement, taking legitimate business risk, and creating jobs. These aren't tricks. These are incentives that the government wants, and they're built directly into the tax code. So the question smart business owners are asking isn't, how do I trick the IRS? The question is, what's the government already incentivizing that also aligns with my goals? When those two things align, the strategy pays for itself. This is not a gray area. This is exactly how the system is designed to work. And there are more benefits in the tax code than 99% of the population realizes. I'm trying to change that. Shift 7. Ask better questions. Most business owners go to their accountant and ask, can I write this off? What do I owe? When's it due? And when they see their tax returns and how much they owe, they sheepishly ask, is there anything I can do now? Those are tax preparation questions. They get you to a filed tax return, but they don't get you a strategy. They don't put more money in your pocket. Business owners who keep more of what they earn ask, based on my projected profit, what options do I have? Is my entity structure still right? Am I paying myself the right way? Should I be looking at a retirement plan or a captive insurance company? Or should I be taking advantage of the Augusta rule or bonus depreciation or a home office? Or any of the more advanced strategies than just those basics? What should I be thinking about before the year is over? All of the business owners that I talk to are tired of accountants who only know how to say no. You bring them an idea, and before they even understand what you're trying to accomplish, they shut it down. Can't do that. That's too aggressive. That won't work. But a real tax advisor does not just kill ideas. A real tax advisor asks, what are you actually trying to do? Then they help you find the legal, defensible way to get as close to that result as possible. Because sometimes the answer is not no. Sometimes the answer is not that way, but here's how we can make it work. And that's the difference between someone who files your taxes and someone who actually advises you and puts more money in your pocket. Good tax advisor does not just say no. A good tax advisor helps you find the legal path to the result you're actually trying to accomplish. Shift 8, document like you expect to be questioned, because tax strategy without a paper trail is fragile. The IRS doesn't care what you meant to do. They care what you can prove. The number one reason the IRS disallows deductions is because the taxpayer didn't have the documents to back it up. So if you hire your kids, document the work they actually did. If you use a vehicle for your business, track your mileage. If you reimburse business expenses, use an accountable plan. If you rent property to your business through the Augusta rule, put the agreement in writing. If you run your board meetings at remote locations, keep the minutes. And it's more than just keeping notes and receipts. If you take a position that's in the gray area of the tax code, you should document the reasons why. This is why you need a strategist who can actually be an advocate for you and your business. The strategy is only as strong as the paper trail behind it. And the last shift is this. The goal is not simply to pay the least tax this year. Yes, that's a great thing, but sometimes the right move is to pay some tax now and create a much better longer-term outcome. Roth conversions, building retirement wealth that compounds tax-free, real estate depreciation that creates short-term paper losses with long-term upside, planning a business sale the right way instead of reacting to it or waiting until the last minute, taking income in a year that you're in a lower tax bracket, investing in growth instead of blindly just reducing your taxable income. The goal is not actually to pay the least tax in 2026. The goal is to keep more of your wealth over your entire lifetime and create more cash flow with less effort. Those are not the same thing. And the business owners who understand that distinction are the ones who actually get ahead. So here's what I want you to take away. There are 3 levels: tax preparation, tax planning, and tax strategy. Most business owners are stuck at level 1. The move forward is to stop reacting and start designing. A lot of business owners feel this pain when they get their first $10,000 tax bill. And unless they learn what I'm teaching here, that pain only increases every single year. So you need to know your numbers. You need to ask forward-looking questions. You need to build a calendar around tax decisions, not just tax deadlines. Use the tax code as a map, not a minefield. And understand that the best strategy is the one that aligns with your goals and incentives that already exist in the law. The business owners who keep the most money over their lifetime are not the ones who found the biggest deduction. They're the ones who showed up to a tax conversation as a strategy conversation year round. If you're generating real profit and your tax conversation only happens at tax time, that's where to start. Book a strategy session with the team at Pennywise Tax Strategies. The link is in the description. It's a real conversation about where you are and what's possible for your situation. And if this video changed how you're thinking about your taxes, hit subscribe, because this is what this channel is built for. Real strategy, real numbers, no nonsense. More coming.